Welcome in, folks. We got a 7-piece here today. A 7-piece to get into. Yes. Okay. First off, Dan Niles is going to share his opinion on Apple and other big tech stocks. Looking forward to getting into that one, reacting to that one. Then we're going to get into this 2-minute clip here. Mohammed Al-Aladian, don't fade the U.S. too early. I'm looking forward to getting into that one. Then we're going to get Kramer talking about my favorite stock to talk about, Chipotle. Then we're going to get Kramer talking about Lululemon, which stock is absolutely crashing today. So that should be interesting. I'll share my perspectives and opinions on those guys. Then we're going to get this little 53-second clip on NVIDIA. Then we're going to get into this little 3-minute clip here around Nike and Wells Fargo's opinion on Nike here. And I'll share my opinion as well. Oh my gosh, I didn't know it was 16% now. Geez. And then at the very end, we'll get into Lulu and Nike together. Okay. Appreciate y'all joining me as always. All I ask in return, just lightly tap that like button. That's all I ask in return. Lightly tap the like. Make sure to subscribe to this channel, okay? My free new workshop, how much money you need to retire, quit your job, focus full-time in investing. That's pinned comment down there. Absolutely free to access that. I'm going to stop shouting that out probably next week. So if you want access to that, make sure you get access now, okay? That's pinned comment down there. Let's get into this.
Dan, great to see you. First of all, do you have a position in Apple right now?
Yeah, it'll be confusing to your viewers, but we're actually long Apple, but we're short a bunch of their suppliers because we think that Apple's got fundamental issues going forward, and we'd rather attack it through their suppliers right now. We're looking, hopefully, for a bounce in Apple tomorrow, just because I'm sure everybody who's loved this will come out and defend it, and hopefully we get a bounce so we can sell it and short it again. So that's kind of how we're thinking about it from a bigger picture standpoint in terms of our position.
I mean, you don't think that this suit is in any way something to factor in when it comes to your long position in Apple? There are a whole host of other reasons why Apple may have its own issues right now.
Whoa. Hold your horses. Hold your horses for just a flipping flapjacking moment. You got to understand what that man just said there, okay? I know that might have been hard to follow for some, okay? Basically, he's long Apple only for a short amount of time. He basically thinks like Apple's going to pop here over the next, I guess, trading day or two, and then he's right back out of it, and he said he wants to re-short it. So he actually wants to short Apple. And you mentioned about puts on Apple as well. So overall, he's negative clearly on Apple over the longer term, but he's maybe bullish for the next day or two. That's kind of his thought process in regards to that. So it's very important everybody understands where he's actually positioned.
I mean, so let me be clear about it. We dislike this stock fundamentally. We dislike it over the next year, etc. You asked me if I had a position in it. It's complicated, but yeah, we bought it towards the end of the day today. But I think if you sold this because of the DOJ, that makes little sense to me because we've known this was coming for a while. They've already lost a lawsuit against Epic in Europe. The App Store rates have already come down. If you are selling it because it's a bad chart, totally understand. If you're selling it because the fundamentals have been poor for a year now, and it's catching up with the stock and estimates have been coming down for a year now, totally get that. But if you're selling it off this DOJ thing, which is going to take years to sort out, that makes no sense. And with the 2 standard deviation move lower, we're like, we'll buy it for a trade and rent it. And hopefully if it goes up tomorrow, we'll sell it and short it again.
Yeah. Strategically, you've been trading from the short side well, by the way. As Tim said, it's underperformed for quite some time. So understanding you're going to look for entry levels and exit levels. What's your ultimate price target on the downside where if it got there, you're like, okay, this is an entry point for now being on the long side and trading around a long position?
So here's the way I think about it. From a long-term perspective, this stock should have a below market multiple. The revenues have not, if you look at what they guided to for the March quarter, they're almost the exact same number as 3 years ago. They have competition issues with Huawei coming back. They don't need U.S. chips to make smartphones anymore. And so I look at it trading at a 25 PE versus the S&P at a 22 PE with hardware companies in the PC ecosystem, for example, trading, in the low double digits. And so I look at this and I say it deserves less than a market multiple, given especially that their high margin revenue stream in services is under attack as well. So from the short side, from a long-term view and a fundamental view, it's nowhere near where I would think this is a fundamental long.
Hey, Dan, it's Tim. Thanks for joining us. In terms of the market's not a zero-sum game, but we often talk about Apple as being such a critical stock for the market. Do you think Apple's weakness actually could be positive for the market? I know this sounds obtuse, but to the extent that we're seeing broader allocation, Apple certainly derives a lot of passive flows, but it also certainly has folks that will be allocating this money to other places that they can find. Again, what is Apple for people? Yeah, it's a market proxy, it's a market weight, but it's maybe consumer staples, maybe it's consumer discretionary. Just thoughts on
where does this money go, right? You sell out of Apple, where does that money go? Well, I'll tell you exactly where that money goes. That money goes into NVIDIA. That money goes into Meta. That money goes into Mr. Softy and stocks like that, right? That's where that money goes at the end of the day. People just find another opportunity in kind of the big tech space. So they sell at Apple, they go buy one of those.
the bigger picture of Apple's role in the market?
I think you're 100% right, Tim. I mean, markets are never good when they go straight down based on the Fed and they go straight up based on the Fed. And you can look at the last 2 years, that's the situation, right? Magnificent Seven down 46% in 2022. Then they're up 111% in 2023. Why? The Fed had the fastest rate hikes in history in 22. They stopped in 23, and people were at one point looking for 7 rate cuts.
I completely disagree. If you want to chalk that up to just being the Fed, that's wrong. Look at earnings. What happened to big tech earnings as 2022 rolled along? Go back and look at all big tech earnings. They started to go down and down and down and down and down, and it was looking worse and worse and worse for them. And then they bottomed at the beginning of 2023, and then guess what happened? The earnings started going up and up and up. Everything started looking better. We know the AI wave came. Look what happened to NVIDIA's earnings, Meta earnings. I mean, pretty much every company across the board, other than maybe Apple, it got better and better and better. And maybe, Tesla, you can make an argument that it got worse. But the majority, it got better and better and better. As 2023 went along, it got worse and worse and worse. As 2022 went along, and no one wants to invest into a market where things are just getting worse and worse and worse. They want to invest into markets that things are getting better and better and better.
Right now, the market's actually really healthy because Tesla stock's down 30%. Estimates were coming down for a year. Apple estimates have been coming down for a year, but the stock was up 48% last year. This year, however, you've got Apple down 10%, you've got Tesla down 30%. And which stocks are performing the best? Well, the ones that took up numbers the most. NVIDIA up 80%, Meta up another 40%, and then you got Microsoft and Google and the others kind of in the middle. So the market is reacting to fundamentals the way it should versus some pipe dream about, augmented reality is going to be great a decade from now or something like that. This is actually a healthy market. And to your point, the money's finding its ways into other areas. We own several industrial stocks that we like. We own some financials that we like. We own some biotech. And you're seeing the market broadening. And I think that's super healthy, whether you're talking about it coming out of Apple or Tesla or you pick your favorite name.
So he talks there at the end, obviously, about this being a healthy market, right? And there's a lot of bears that will push against that. They say it's a bubble market, it's crazy, these sorts of things. And if you hear the bear case, that's a lot of that. What do I feel? Do I feel like this is a healthy stock market we're in right now, in financial market in general? Do I feel like this is very unhealthy and we're going to have big problems coming here? Okay. My opinion is, when I look at the overall financial space, including the stock market, I see pretty healthy overall. And the reason I see pretty healthy is when you look at earnings growth is very nice for especially a lot of the biggest stocks that matter to the market at the end of the day, right? Maybe not Apple and Tesla, but outside of those two, I mean, you start going through the stocks in a lot of the biggest market caps in the NASDAQ, in the S&P 500, earnings growth looks very good. And that's good for them for at least this year, right? Who knows what happens a year from now, 2 years from now, 5 years from now, right? But for now, that's really good. On top of that, we have serious money on the sidelines, right? Literally all-time record highs, and that money's going to continue to build here because of all the interest being paid out to it. So that's very good, right? And so margin debt, if you look at margin debt, it hasn't gotten out of hand as a percent of the stock market. So when you look at all those kind of factors, actually, we're looking pretty decent as far as a healthy market, right? And that could change. That could change 12 months from now, 24 months from now, 36 months from now. But for now, looks pretty darn healthy. Mohammed Al-Alarian, don't fade the U.S. too quickly.
The news conference with Chairman Powell.
I was surprised by the extent to which he stressed patience in two ways. Patience with inflation running higher. He basically dismissed the fact that we've had some pretty surprising, hotter than expected inflation prints. And then the second patience with the balance sheet, saying, you know what, we may get there slower, than we would have otherwise, which means that monetary policy is going to be more expansionary than it would have been otherwise. So I was struck that on the balance sheet, he took such a big step forward when he could have waited till the next meeting to do that.
So we keep wondering what shoe is going to drop, right? We keep thinking everyone's bullish and then more bullish and then bullish on top of bull. And you have to wonder, okay, well, when does something break? And we were talking on Wednesday, it's the inflation expectations, that at some point this is going to be a higher, more inflationary environment with a Fed that is less willing to fight it. And yet I'm not seeing it in break-even rates. I'm not seeing it in other places that you normally would. Why do you think that is?
You're seeing it in gold. Look at the reaction of gold, record highs on gold. I think what you're having is, and you've all said it really well, the everything rally. So it's going everywhere. What's interesting now is this notion of market enthusiasm.
That's fair. Everything rally, gold, Bitcoin, stocks, even real estate might start ticking up. We'll see. There's been some data out there that maybe real estate is ticking up. So yeah, kind of an everything rally after an everything crash in 22, right?
Not economic enthusiasm. There's a big difference. Market enthusiasm could spread to the rest of the world. And that is quite a consequential statement. If that occurs, then the U.S. relative strength is going to be somewhat diminished. I think it's actually too early to pivot. I do think that, to use your phrase, U.S. exceptionalism, economic exceptionalism, isn't going to expand to the rest of the world. The U.S. is really exceptional when it comes to its economy. The others aren't doing what the U.S. is doing in terms of investing in the future drivers of growth. They don't have the entrepreneurial society that we have. They don't have the mobility of factors of production that we have. The U.S. is truly exceptional among other advanced economies.
So do you think it's rational for people to stay in the United States and to keep adding more, even if valuations are at such high levels relative to the rest of the world, to continue to kind of bet on this ship and not expect it to expand elsewhere?
So I've been asked that question every single year for the last 5 years. And every single year, the U.S. premium has increased. And every single year I said, don't fade the U.S. too early. I see some argument for diversifying away from the U.S., purely on this enthusiasm and on relative valuation, but I don't see it as strong. It is not being supported by fundamentals. People have to realize this. This is more betting on the momentum. And I understand that. The momentum factor is very strong right now.
Yeah, so some people out there think it is smarter to bet on other countries rather than bet on the United States. They see other countries, sometimes their GDPs are much higher than the United States, so they think they're going to make an arbitrage by basically betting on the rest of the world versus the United States, okay? So, do you think that's intelligent? This is the same exact thought process as thinking, some company that's not nearly as high of a quality. Because let's be honest, if you're betting on any other country in terms of their stock market and how their stocks do versus the United States, you're betting on lower quality. Let's just call it what it is. So that's the same thought process as thinking like a really, poorly run company is going to outperform a really well-run company. Could it happen? Sure. Is it likely to happen? Probably not, because there's a whole host of factors. You could look at China. China is a perfect example. China's GDP has far outpaced the United States over the past 20, 25 years. Look at the Chinese stock market over the last decade, 2 decades, 3 decades, even if you want to look, and look at the United States stock market. It's absolutely amazing. It's a night and day difference. The United States stock market blew the Chinese stock market out of the water, and it wasn't even close. And that's despite you being right about Chinese GDP. Oh, it's going to be this, it's going to be that, right? And so just keep that in mind in the future. You might think, India is going to grow like crazy. India will grow like crazy. I'm very bullish on India. But if you think that, the stock market in India is going to do better, and India stocks are going to do better, the United States stocks, good luck on that bet. That's all I'll say about that, okay? All right, next one up here. Kramer is going to talk about my favorite stock, Chipotle.
Not here, Jim.
I went over to see the robotics section. It was rather amazing because the robotics, I think, are the ones that are going to be most improved by the new chip Blackwell. They're not there yet. They're doing mostly pedestrian things. When they're done, that bartender will be able to make me a much better drink than he made me yesterday or 2 days ago. That was a mocktail, by the way, just so people know.
Yeah, I know you're not drinking during the day, and there you are. That's
my gosh. Oh my gosh. Yeah, I know you're not drinking. That was the most BS thing I've ever heard in my life. Like, if you say something like that, that person's a day drinker. Like, I'm just going to be honest with you. If you've got to say something like that, that person's a day drinker. 100%. Stop it.
Maybe yesterday or 2 days ago. That was a mocktail, by the way, just so people know.
Yeah, I know you're not drinking during the day, and there you are. That's wow. You're doing that's
well. That's
Vision
me
Pro,
being
right?
that's me that saying that Apple should be talking right now to Jensen. Because that's me in a Nissan car. I had no idea I was not in the car. That's cold rolled steel right there. There's me opening the trunk.
You had no idea you were in the car. What in the world, Kramer? Were you drinking?
You look very strange there.
There I am sitting in the bucket seat, trying to fix the seatbelt, and then ultimately I get out and I don't realize I'm not in the car, and I swing my leg as if I'm basically worried about hitting the rocker panels.
All right, we got a short time for a stop trading. What do you got? Chipotle?
You know, I feel like there's an issue going on right now with how much a stock split really means. Watch Chipotle. I think it went up a huge amount because they announced the split. Now, of course, what you do need is some earnings or some upgrades. But I think that, David, we're going to talk about the split next week because it's the first time I've heard an actual economic reason for why it's justified. It's just so much easier to buy a stock with a large order if you do a 50 for 1. I can't wait to see you.
Yeah, well, you won't because I'm going to be away next
What a bunch of BS. What a bunch of freaking... oh, my gosh. What a bunch of BS. Oh, yeah, because the stock's struggling so much. Trading at its 52, 55, forward P, whatever it is. Yes. We need to help out that stock. Oh, my gosh. They're going through such big struggles. Come on, man. It makes NVIDIA look like the greatest deal in the history of mankind. NVIDIA is trading at a far cheaper forward PE than Chipotle, with ridiculous growth compared to Chipotle. I mean, give me a break. It's such a BS excuse. It's just another thing to try to pump the stock even more.
But what do you got
No,
tonight?
you're supposed to say you'll be off for the morning, for heaven's sake.
Oh, yeah, right. I'm on assignment. I'm going to be on assignment relaxing somewhere. What do you got tonight on the show? Yeah, thanks.
I've got Okta, which, by the way...
All right, let's get in this next one, Lululemon.
It's going to be down sharply. What's going on there, Jim?
This was a very tough call from a very high-quality management, where they just mentioned several times U.S. traffic has slowed high single digits. I was very surprised. That is a big letdown. The company was really somewhat mortified by what they're talking about, a slowdown, really pretty much across the board. Broad base is the term they use. This was surprising, and their forecast... 10-11%. David, this is a high growth company, and I think that they themselves were caught unaware at how weak they can be. I don't know if they can pull out this fast. Cal McDonald is a very well run company, CEO. I know that they were. I think that they did blame the consumer at one point, not themselves. I think that is something that I question because the consumer was very strong in a lot of other places. But geez, this was just sheer disappointment. Surprised there weren't downgrades on the street. No one wants to leave this company because it's been so successful.
Right.
Just a weak quarter.
Technically, it looks like a lot of people want to leave the company.
That really seems to be moving it is the fact that first quarter 24 guidance is for 9 to 10% increases year over year, Jim, which is below virtually every estimate out there from the analysts.
Yeah, and you know what? You could go to Ralph Lauren and get much better numbers. PVH, and we could look at the numbers and say, wow, wait a second. This was just a suboptimal quarter. Now, the question is, should we draw a pattern? Nike, Lulu, are these companies that are just charging too much when others are coming underneath them with good product? That's what I question. They don't address the competition in any of these. They still act as if they're kings. I don't think they're kings anymore.
Ooh, so Nike, wow. Kramer called them Lulu not kings anymore? Ooh. Okay, so Nike had something. I listened to a Nike conference call while I was driving home last night. And I heard something very interesting, and this relates to Lululemon. Nike specifically called out that $100 plus leggings was an area of strength for them, right? And we know that is Lululemon's core business. So if Nike's starting to see nice growth there, that's a straight competitive threat, obviously, to Lululemon, right? And Lululemon's just at that stage where either they've got to grow in to become a Nike, or they're going to fade over the next many years, similar to how Under Armour faded, right? Under Armour stock's down like 65% in the past 5 years. And that, for a while there, it looked like Under Armour was going to become like a Nike-type company. It was going to be a big competitive threat. And then they just faded, right? And so Lulu's at this is a huge time for Lulu's business over this next 5 years, because they either need to become a Nike or they're going to fade off and become ultimately just a very disappointing, kind of low quality, like an Under Armour type company, right? And so that's around, but it's not what it once was, right? And so we'll see what happens. I have my doubts about Lulu becoming that next Nike type company, because I don't think they are really willing to spend on marketing the way they need to spend. I don't think they're really willing to spend on athletes the way you need to spend to build a lasting, dominant brand. I just don't think they're going to, no one really can do that. The only company that can is Nike. So we'll see where it all shakes out over the next, 5 years or so. But I have a lot of question marks around Lulu in regards to that. At the same time, am I interested in playing puts on Lulu? Nah. NVIDIA. Okay.
I have a conversation right now. Weiss, you recently bought more NVIDIA, right?
I did. I mean, on one day, right after Jensen Huang spoke at that long conference, at that long presentation speech, rather, the stock traded off in the afternoon. That traded up meaningfully in front of it. And when I say meaningfully, let's not forget, you're talking about 20 points on an $800, $900 stock. So on a percentage basis, it's nothing. But then it traded down. I think traded down about 34% the next day. I took that opportunity to buy a little bit. Unfortunately, it recovered so quickly I didn't get much. So it's still a relatively small position. But again, you've got to take what the market gives you and not try to press it. So I'm happy with my positioning. I still have cash overall in the market, and I'm there to buy other sales.
What did I tell you guys in regards to NVIDIA? I told you guys something, okay? What did I tell you for the last many, many months now at this point in time? Every single dip will be bought in NVIDIA until the story changes. That stock will hit new all-time high after new all-time high until the story changes. And when I say the story, I'm talking about revenue growth. If at any point NVIDIA's revenues start going down, the story changes. Or if there's a hint of NVIDIA's revenues going down, the story changes and the stock will not be bought anymore, right? And if anything, rallies will be sold. But until that moment, every dip will be bought in the stock. Anytime it falls for a day or a few days or a week or two, it'll be bought right back up. It'll be a new all-time high, new all-time high. It's going to hit 1,000. It's going to hit 1,250. Then it's going to likely hit 1,500 plus. And then it could be on its way to 2,000 if they can keep this revenue momentum going. But once again, once the revenue momentum breaks, the stock will break. But I don't think it's going to break at least this year as far as the revenue momentum. It looks like this year's clear. And honestly, 22 is probably looking good with that new Blackwell chip plus the software revenue start pouring in next year, in 2025. So I think it's high probability is safe for this year. I would say probably safe for next year. And then we'll see about 2026, okay? Nike has made a mistake focusing on direct-to-consumer, Wells Fargo says.
This morning after both issuing softer guidance than the street was looking for.
By the way, who called that out years ago on the channel? I told you guys years ago, because I was an owner of Foot Locker back in those days, and I said, this is something that will, actually, I don't know, I don't know, it might have been an owner back then, or it might not have been, but basically, Foot Locker was going through some troubles, they're still going through some troubles, but they were going through some troubles because basically, Nike wanted to try to sell more in-house and try to, capture more margin, and I said, Nike's got to realize they're going to hurt themselves and they're going to hurt their partners by this. They need to make sure they utilize their partners. And, whether it's a DKS, Sporting Goods, whether it's Foot Locker or others, they got to make sure they're utilizing those. And sure enough, it definitely hurt them over the years. But, on Nike's conference call, they talked a lot about their partners last night and making sure their brand's in a great place when it comes to those partners.
Next guest, lowering his price target on both the stocks, sticking on the sidelines for Lululemon, worried about the U.S. slowdown, but still with an overweight rating on Nike.
17%? Did that hold? Oh my gosh. $83 a share it dropped? Lulu, my poo-poo? Oh my gosh. What in the world? We're going to see what's going on here. Well, I don't need to go to big tech. Let's just see. Lulu. Let's see here. Lulu. Dang, hard hit today. Oh my gosh. So looking like about a 15% drop there. Nasty. And look at that. Best stock of big tech here today. NVIDIA. How about that? Meta looks like it should eke out a green day. Tesla, it's coming back a bit. I think Tesla. I think I got a share of Tesla at 167 today, I believe, or something like that, in the Patreon portfolio. By the way, if you want to support me on Patreon, that's the description area down there. You can see the stocks I'm buying and selling each week.
That new shoes in the Olympics could give bulls some hope. Joining us now is Wells Fargo's Ike Borchow. Let's start with the Nike call, because you took down your price target, but still see almost, at least 20% upside for the stock. So you have confidence in their innovation turnaround here?
Yeah. Hey, Sarah. So I think what's good about Nike right now is this is all about recovery. The margins are depressed, the productivity is depressed, and you have an agent of change that has started. The innovation process has finally begun to pick up. There are green shoots being spoken to. I'd say the number one thing that they talked about right now is Dynamic Air. It's the newest innovation platform they've had in a long time. They're going to scale this across their leading Air franchises. Air Max DN launches in 4,000 stores next week on Air Max Day. There's been some good buzz so far. It's still a TBD, but this is kind of where you need to start. It's all been about a lack of innovation, and I think you see that pipeline finally starting to pick up, which is good.
The green shoots, it's a word that they used on the conference call yesterday too, Ike, and we saw that in the quarterly numbers, but then when they did the preliminary forecast for fiscal 2025, expecting negative growth in the first half, wasn't that a surprise to Wall Street?
Yeah, and we had previewed it and said the street was too high for fiscal 25. I think the street was a little bit optimistic. I think, Sarah, what you have to understand is, assuming that they're going to be hitting their plans, they're calling it life cycle management. So there's a management of key products that is going to create some near-term headwinds to the business. This is basically temporarily offsetting the scaling of new products. Think about older franchises that they need to kind of reduce inventory and SKUs in the marketplace in order to start pushing new innovation. It actually ends up being a near-term headwind to revenue. I think they were signaling that to the street for next year. I don't think that offsets Now,
here's a beautiful thing as a long-term investor, right? What that man just said, and it's very important if you have a mindset like mine, you're thinking several years out with companies, think about owning them over the next 3, 5, 7, 10 years, whatever, right? You've got to differentiate between what's going on with the company short term versus what's going on long term, right? They're talking about first half of the year, revenue is weak because they got some changes here, they got some products that are going out. All that is all irrelevant. It's all going to be irrelevant 5 years from now, 3 years from now, a year from now, just to be quite frank. All those little short term things about, not quite hitting this number this quarter, all that ends up being irrelevant over time, okay? All that matters is the long-term story in tech, the long-term revenue trend, EPS trend, all those sorts of things. And so, in the brand, right? And so I have no doubts in regards to all that. All this little short-term stuff will be what it's going to be. It'll pass, and people will forget about it, and then, long-term story is long-term story.
The improved emotions around the innovation, but that's the issue that happened with street numbers on the call last night.
Well, and the other thing investors have to be asking themselves right now is, are the right people in place to execute this turnaround in innovation, which is Nike's bread and butter? There have been a lot of changes that John Donahoe has made in the last year, a new design chief. Heidi O'Neill has now gotten a much bigger job. How do you judge the current executive team and predict whether they can sort of get back to a more competitive position in a more competitive market?
I think the way I'd phrase the answer is to say that there were strategic missteps that were taken in this business back in 2021. I think the focus, or the hard focus on direct-to-consumer and kind of shunning of the wholesale channel was bad. It was a mistake. It set the company back. It took their eye off the ball on innovation and product, and it kind of has led to where we are today. I'd like to at least focus on the fact that we've admitted we have a problem. I think on the December call, they were very clear. They admitted there was issues there. They're not thinking about the channel strategy the same way. I expect more product and conversations with the retail partners to push product back to wholesale. I think it's going to take time. What we've said is bulls have to be patient. At sub $100, you're kind of getting paid to wait, but that's kind of how I answer that, Sarah.
All right. Thank you very much.
100%. Yep. Everything I thought was going to play out played out. Retail under pressure. Lululemon, Nike shares sink.
Jobs for both Lululemon and Nike. Senior retail reporter Courtney Reagan is following the moves. Courtney.
Hi, Frank. Good to see you. So Lululemon put up a strong holiday quarter with strong sales and expanding margins, but it's really being overshadowed by that forward-looking guidance. On the top of the earnings call, though, CEO Calvin McDonald said, quote, there has been a shift in U.S. consumer behavior of late, and we're navigating what has been a slower start to the year in this market. Now, most analysts look at the stock price weakness for Lulu as a buying opportunity here, and they're looking at the guidance as conservative. They're not overly concerned about Lululemon losing share to competitors like Alo or Vuori and some of the other upstarts. Nike, too, though, outperformed for the quarter and issued disappointing guidance. Nike's been going through a turnaround effort for some time. We know that, leaving analysts mixed on near-term expectations. Executives now talking, though, less about being targeted on their direct-to-consumer selling and more channel agnostic, which actually includes leaning in with some of those wholesale partners. So the Nike story might be a little bit different from Lululemon, but we haven't really heard any weakness or potential weakness.
Another thing, if you want to know about Nike in China, they said this on the conference call. This was some really good information. They were saying, obviously they've been partners on Tmall for a long time, but they said Tmall is experiencing a tougher growth dynamic, but there's another service in China that has been taking off like crazy. I cannot remember the name of it off the top of my head in China. And they're just getting on that particular service in China. So that should be a very big benefit to the company in China over the next, many, many years, obviously, right? So just a little food for thought there.
From Lululemon in quite some time, which might be a little bit of a shock to the street and part of the reason, again, for that downward pressure today.
Yeah, a lot of downward pressure, especially for Lululemon, just looking shares down double digits. Courtney, thank you very much. Joe, going to come over to you. You own Lululemon in the Joe T ETF. What's your thoughts about the quarter, and then about the thoughts about some of the speculation that, the high-end consumer may be getting tired, maybe getting worn out right now?
I think you have to try and simplify this conversation the best you possibly can if you own Lululemon and, by the way, extension, if you own Nike, because you have to be careful being very complicated and saying, okay, this is a larger read-through on the overall state of the consumer. Yes, from a fundamental standpoint, you have the first quarter for Lululemon where you sit back and say, okay, I've got some disappointment. I've got some disappointment because they delivered on the earnings, but they really didn't deliver in terms of what their guidance might be. They see something that they're somewhat concerned about. Should that make me concerned? I'll say this, okay? This is a company that has in the past disappointed in that regard and quickly recovered. So be very careful dismissing the ability of Lululemon not to recover quickly. With that being said, technically, you've got a breakdown here. The stock is below the 200-day moving average. You have to acknowledge that. In the case of Nike, you kind of have a little bit of the opposite, where the technical condition was already negative to begin with, and then you get the fundamental story. So how do you resolve all of that? You look at Lululemon, you say to yourself, okay, technically I've got a little bit of a breakdown. Okay. Fundamentally, I see something in the future that will resolve itself. Where's positioning? Always go back to positioning. And positioning in Lululemon right now, it's pretty long. I think it's well understood that speculators are long Lululemon right now, and I think that portends a little bit of further weakness in the near term.
Ooh, so, Weiss, you got to take on Lululemon as well?
Yeah, first of all, it's such a great idea to keep Jim out of any block that concerns fashion. Look, in terms of Lululemon, expectations are very high. The stock's still expensive, although I'm looking at it, I'd like to buy it. They have a unique brand there, and they do have pretty much a lock in the market. You've got Alo, but it's not the same. Lulu's much broader. But Nike specifically, this is more interesting to me. This is another sign that the Chinese population, the consumer, is having sort of their day of reckoning with U.S. brands. So if you take a look, Tesla's down, Nike's down. You can talk to others that are down. That's a real issue, and I think it's just the beginning of it. So what went from everybody's got to be in China, to where the big growth is, to now the reverse. The Chinese government is supporting local brands and unsupporting, maligning U.S. brands. So I don't know how they get out of that.
All right, well, Nike shares down 7%. We've got to leave the conversation there.
Yeah, so just fine in China in regards to Nike long term. Actually, their numbers weren't that bad in general, and the fact that they're going to get on the big service that's been taken off is pretty meaningful. Okay, all right, guys, make sure you get my new free workshop. I'm going to stop promoting that next week. So if you want access to that, make sure you get access now. It's going to be the pinned comment down there. It's absolutely free to receive that video over. Okay, much love and have a great day.